Hey guys, how's everyone doing? Can you hear me okay? Awesome. So I thought I'd hold this surprise webinar because yesterday I shared free trades with you guys in my analysis. EURGBP, GBPUSD, and GBPAUD. And all three of those trades triggered. And they did quite... okay, let me get the chat back up on the screen. I know that when you're watching the recording on YouTube, the chat appears on the right, but I like having it on the screen too because it's easier for me to read. But not only that, it's also easier for people to see the chat on the embedded video because they won't see the chat there. Anyway, can you guys hear me? Just checking because someone can't hear me, so... As far as I can tell, right. Can someone please tell Maharashi to just refresh his browser or something? Anyway, I don't have much time today. I need to get to the gym very soon. So I want to get through this quickly. If people are having audio problems, catch the recording. I can't hold up the webinar because I didn't have this scheduled. I just decided to do it out of nowhere. All right, so yesterday I shared free trades with you guys. EURGBP, GBPAUD, GBPUSD. Now, these trades, all three of them triggered. And I wanted to talk a little bit about these trades because I've had a lot of questions via email about the trades. And, you know, a lot of the questions were about correlations. So these trades, they're all correlated because they're all GBP. And should I just trade one of them? Should I trade all three of them? Is trading all three of them a bad idea? Blah, blah, blah. All these kind of questions about correlation. So I thought I'd talk about my approach to trading free pairs that are generally speaking correlated and how I do it, or why I traded it this way yesterday, how it worked out for me, and how some others chose to do it differently and it didn't work out too well for them. So we're going to make this a pretty quick webinar. I don't expect for it to last much longer than 20 minutes. We're already at 4 minutes, so let's get into it. So correlations. Correlations are somewhat important in Forex trading because when pairs are correlated and you're in, let's say we've got these three correlated pairs. They're not perfectly correlated, but they've got some sort of correlation because they're all GBP pairs. So you're entering free trades on GBP pairs. Now, is that a smart idea? A lot of people would say, no, it's not a smart idea. It's a bit too risky because they're all GBP trades. So if one of them fails, all of them are likely to fail, which, you know, there is kind of a point there. But there are a few different ways of looking at it. Now, some people, what they would do, and this is what I used to do a few years ago, and it kind of makes sense, is to pick out of the free trades, to pick the one that looks the best and to go for that one. Now, yesterday, in my mind, that was the GBPUSD trade. That one looked the best out of the free. It had a good risk to reward ratio. You know, if you had your target all the way up here, it was to the top end of the support area, whereas GBPAUD was at the bottom of support, meaning that when price breaks through a support area, that support could become resistance. So we could have got a continuation like that instead of a reversal. And EURGBP just didn't look that great from a technical standpoint. So GBPUSD was, in my eyes, and in the eyes of a lot of traders, was the best looking one. So what do? Do you trade just GBPUSD? Or do you trade just EURGBP, just GBPAUD? Do you trade all three of them? How do you handle a situation like this? Now, for me, in my trading, I have found that the best way is to just take trades on all three of them. Now, the reason for that is that, number one, correlations work until they don't work. So pairs are correlated until they're not correlated. I know that's an obvious statement, but pairs are correlated, but a lot of the times correlations break. And we saw a break in correlations on GBPUSD and GBPAUD yesterday. One of them reversed and went up. The other one went down in a big way. And that was a pretty significant break in correlation. And if I had traded just GBPUSD because it was the best looking trade out of the three, what would have happened? Well, I would have lost. The other two trades would have worked out, but I wouldn't have been in them because I would say, no, I'm only going to trade one of these. I'm going to trade the best looking one. Because in reality, the best looking setup isn't always going to be the best performing setup. A lot of the times it will be, but not every time. In fact, quite a few times the best looking setup out of three setups is not going to be the best performing one. Just because it looks the best, it doesn't mean it's going to be the best performing one. So in this case, GBPUSD was a failed trade. It triggered with this upper wick here. It just triggered because it pushed up a fair way above, so it just triggered here. And then shortly after, boom, turned around, hit the stop loss. Almost no time to react. There was almost no time to exit early to see what was happening because it all happened so quick. All happened after the entry triggered. It dropped down within a few hours. So if you were asleep, if you were whatever, this turned around quite quick. So there was little time for you to stop and say, doesn't make sense. Because a lot of trades, what they'll do is they'll stall out for a few hours, they'll pop down, they'll come back up, they'll do this, that, blah, blah, blah. And you have a lot of time to think about it and to make a decision. This was 5 or 6 hours, boom, down, hit your stop loss. There's very little time for you to make a decision and change the trade, tighten your stop loss, whatever you want to do. But GBPAUD, on the other hand, that one worked out really well, worked out really quickly too. Shot up to the 1.5. In fact, it was a little bit too quick, to be honest. I did make a bit of a mistake with these trades. A bit of a mistake. And that mistake was simply my alarms. I set my targets at 1.5. This is what I do when I'm going to sleep and I'm in some trades. I'll set my target at wherever I want it to be. So in this case, it was at a 1.5 risk to reward ratio. Then I'll set an alarm below that. So let's say my target, is here. I'll set my alarm somewhere like there. No specific number, just a rough kind of, or maybe a bit higher than that, but just a rough amount away. I'll set my alarm there. And then as it pushes up, my alarm gets triggered, then I have enough time to come back to the trade, generally speaking, and see how well it's moving and if I want to extend my target up to the resistance area. So my plan overall was to extend that target up to there. But to be honest, it triggered at like 7 a.m. or 6:30 a.m. in the morning was when that alarm triggered. And I was just like, yeah, wait, let me see the exact time it triggered. Yeah, it would have been 6:30 a.m. or 7 a.m. Triggered very early. So did EURGBP, triggered around the same time when this kind of started shooting down. So it all happened around 6:37, and yeah, I just said, nah, screw it. I'm not getting out of bed. I couldn't be bothered, and I left it open. And when I woke up, boom, my target had been taken out. So they were both profitable trades, EURGBP and GBPAUD, but they weren't as profitable as they could have been. Especially GBPAUD. I'd still want to be in that one. It's still moving well. EURGBP, I'd probably still want to be in that one too. But whatever. Anyway, the point of this webinar is I just wanted to discuss this basic concept of when you've got free trade setups that are correlated, don't pick the best one and trade just that one, because often what's going to happen is you're going to end up getting one of the worst performers out of the free, or the average performer out of the free, and you're going to miss out on what is in fact the best one. In this case, what happened was, if you picked the best looking pair before they triggered, that would have been the worst performer. You would have lost that trade. You would have lost money on this one. While the other two that you neglected because they didn't look as good were the ones that actually resulted in profitable trades. So for me personally, what happened with these free trades was I got out with 1.5R. If you don't know what 1.5R is, 1.5R is just 1.5 times the size of your stop loss. That's your risk to reward ratio. So I got 1.5R plus, let's just do 1.5 plus 1.5. This is how traders calculate their profit. They use R ratios. 1.5 plus 1.5 is obviously free. And then I lost 1R on GBPUSD. So minus free minus 1 equals 2R. So I walked away with 2R on these free trades, whereas a trader who was focusing solely on GBPUSD would have walked away with minus 1R. So translating that into money is, you know, it totally depends. But just making it easy, let's say 1R is worth, I don't know, $100, just for an easy number. So I would have walked away with 200, while the other trader who's focused just on GBPUSD has walked away with minus 100. So they've lost money. I've gained 200. Yeah, so I know this is a short webinar, but I think it's a really important concept to explain that when you're looking at correlated pairs, don't say, oh, these are correlated, I'm only going to take one of these. It's best to spread that risk over the free pairs, because if they all fail and you're taking the same amount of risk anyway, let's say you normally trade with 2% risk. So that's 2% risk per trade. This is a really inefficient way of writing because the text is so small, but let's say you're taking normally 2% risk per trade. So that means you're risking 2% of your total capital on each trade. Now, you have these free setups. Instead of risking 2% on one of them, just split that 2% between the three of them. So you would do 2 divided by 3, 0.66. So you risk 0.66% over the free trades, and that way, 0.66% over free trades. That way you're splitting your risk over three different trades on correlated pairs, and you have a better chance of winning. And if they all fail, then you've lost what you would have lost on that single trade anyway. If all 3 of them fail, you lose 0.66% times 3, which is 2%. If 2 of them fail and 1 of them succeeds, then you're losing 0.66% times 2. You're losing 1.32%, and you're gaining that 0.66%. Whatever, you get what I mean. If you spread over those multiple pairs when you're trading correlated, you have a better chance of ending up successful. So, very simple concept, but it's one of the most important things I've learned over the last, since about 2017 I've been doing this. It's one of the most important things I've learned in trading since 2017. I've been trading for a long time, but my trading is constantly improving because I'm always learning new things. I'm always discovering new things, especially when it comes to risk management, which is what this is. This is risk management. When it comes to risk management, I find that splitting over multiple is almost always better. There are, of course, scenarios in which this would not be better, but most of the times it ends up being much better. Right, so are there any questions about this? Or is the concept clear enough? I don't do supply and demand trading. So I can't really comment on it. But also, let's keep this webinar on subject. This webinar is about risk management when it comes to correlation and how to manage it. How to manage your correlations. It's a short webinar. We don't really have time to talk about, support, resistance, blah, blah, blah. Keep in mind, sometimes it's not going to work in your favor. There are definitely times where it does not work in your favor. But the times that it does work in your favor outweigh the times that it doesn't. Andrew, would I ever have a buy for GBPAUD and a sell for GBPUSD? Yeah, definitely. If they're showing two different setups, I will definitely trade them because correlations break all the time. So we've just seen today a correlation break between GBPAUD and GBPUSD. So if I have strong setups for both of these pairs, but they're opposite, so GBPAUD is showing me a good long, and GBPUSD is showing me a good long, while GBPAUD is showing me a good short, I'll definitely take those opposing trades because correlations break, and I know they break, and I'm willing to trade the breaks of those correlations. Of course, when you're trading something like that, it tends to be somewhat riskier. But there's nothing wrong with trades that are somewhat riskier as long as you're managing that risk properly, then you're fine. And I don't know how to say, I'm just going to say Michael. Yeah, anything that's correlated, if there's a high correlation, you can definitely do that. That's unfortunate. I think my internet is fine today. I have pretty good internet, so I don't know why. My upload speed's really good. I don't know why it would be blurry, but you can catch the recording. The recording's not going to be blurry. A 2-to-1 ratio, yes, would make it your risk 50, your target $100 or pips or whatever. Ideally, I would have wanted to take 1 to 2, so 1 to 2 on this. On EURGBP and GBPAUD, but because I didn't get out of bed because I was too lazy, I could have got 1 to 2 on EURGBP. That would have been possible. It hit that 1 to 2, but I was lazy, so I stayed in bed and I lost out on some potential profit. But I mean, that's just reality of trading. Sometimes your trades happen overnight, and you can't just always get out of bed and chase your trade. Sometimes you just say, okay, I've got my take profit in there. I'm willing to accept that take profit and not make that extra money because I'd rather sleep. So I didn't get 1 to 2 on EURGBP, nor did I on GBPAUD. I could have on EURGBP. I'd still have GBPAUD open, pursuing that 1 to 2. But hey, didn't happen. I'm okay with that. It's fine. So whenever you see correlating pair and it's a setup, you should take the trades on both pairs. Well, I wouldn't say whenever, but I would say on most occasions, yes. I don't really trade GBP New Zealand, but I'm sure it was. A lot of the GBP pairs were looking good for buys. Andrew is saying, so basically you don't really look at the correlation, just the price action. Well, I do look at the correlation. I need to know if they're correlated, but I trade. The whole reason I'm splitting my risk over the free trades is because they're correlated. So I do look at the correlation. And because of the correlation, I split my risk. All right, nice work, Chris. That worked out well for you. Hi, Zakira, and hi, and Antoine. I'm not going to trade USD JPY. I don't really see a good setup here. Plus, it's Friday. You know, there might be a long setup here, but I'm not too crazy about it because last time it attempted to go long, it just stalled out completely here. And I think it might have a good chance of doing the same thing again. Are there setups on it? Euro AUD and Euro CAD? I mean, there's setups on it. There's not setups on it, so it doesn't matter. They're correlated, but... GBPUSD will go up. I don't know. I'm not seeing a setup there. I don't know if something's going to go up or down. I don't think anyone really knows long-term what a currency is going to do. Maybe fundamental traders, economists have good long-term predictions. I trade the setups I see when I see them. That's how I trade. Right now, I'm not seeing a setup on GBPUSD, therefore, not interested. Anyway, guys, the questions are getting a little bit off subject here. So I'm going to wrap this thing up. I need to, as I said at the start of this webinar, I need to head off to the gym. So I'm running a little bit late because of this webinar. I just wanted to share this basic concept of splitting your risk on correlated pairs. So that was the purpose of this webinar. I think I shared that. I think most of you guys have got that down. If not, there is going to be a recording, so you can review it in the recording. I will probably be holding a webinar, an open webinar, public webinar, whatever you want to call them, soon. Probably going to be holding a free day event. Every year I do a free day webinar event. So over 3 days, I break down my strategy step by step. So I'm probably going to be doing that. I got no idea about USD ruble. I don't trade it. I got no idea. So yeah, I'll send you guys information about that. Thank you guys for attending, and I will see you guys soon.